Life insurance contracts are a great vehicle to store and grow cash reserves. The way it works is you put a certain amount of money into one of these policies, let's call it the premium, and let's say for every $100 that you put in, maybe $25 of that is the cost of insurance, give or take. This is just a hypothetical example. The other $75 of that 100 is going towards a cash account that's also been opened up, and the cash account will grow based on how much you're funding it and the interest that's credited each year. The amount that you can put into one of these policies is very flexible. As a matter of fact, in that same example, if you put $500 a month into that same policy, maybe the cost of insurance is still $25, $26 per month, but now instead of $75 a month, it's $475 a month that is going into the cash account that is going to grow based on the deposits and based on the amount of interest that's credited each year. Now, there's a couple things to keep in mind. These are life insurance policies and they're not considered investments. But the IRS will allow us to put certain amount into any of these policies, and the cap is usually based on a combination of factors to include what is the total death benefit and what is the cost of insurance. So if you want to put not just $500 a month or $6,000 a year, but if you wanted to put $100,000 a year or $200,000 or $500,000 into one of these policies for the purpose of using it to capitalize your business or just to have a safe haven that will grow, then all we have to do is design the policy so that the IRS will allow you to put this money in and then take it out tax-free later. We can take loans against the policy tax-free as long as we design it and do everything correctly. Money can come out tax-free. So potentially investors will use these types of policies to shovel money into it and then later maybe take out a chunk of money, take out a couple of $100,000, go buy a piece of real estate, fix it up, flip it, take the money and put the money back into the policy. Why should you pay hard money lenders exorbitant fees on the points and the interest rates when you can be your own bank? I can be the Bank of Dave. My name is Dave. I opened up the Bank of Dave, and later I can take a loan against my own bank, and I don't have to pay any of those fees or points. Now, there is an interest that I'll pay, but that is also a wash when you look at how the interest is credited towards the same money that has been withdrawn for a loan. So let's talk a little bit more about that. But the bottom line is cash value life insurance policies are a great tool to push money into so that you can take it out later tax-free. Life insurance policies are kind of sacred in that it's typically not accessible by creditors or anybody that's coming after you with a lawsuit. I'm not a CPA, I'm not a lawyer, so definitely confirm these things. But I think you're going to find that cash value life insurance policies, when they're designed properly, can be a great tool for future tax-free money, whether it's for capitalization of a business or supplementing your own retirement income or just all of this plus generational wealth building that could be passed on to your heirs tax-free. Let's talk more. You'll find my contact information.